Hi guys, welcome back. Roy Cousins here with yet another one of our top value trading sessions, one of many we're having every Thursday right here, powered by Light Forex Broker. Today we're gonna have a special one, I think. We're cutting out the bullshit. That's what we do. There's lots of noise out there. I'm keeping it real for you guys. I'm basically sharing my real platform in real time. Now, you have to remember, I've been trading the markets for 15, 16 years now. And at some point, after a few years, I actually went on to become an expert in technical analysis. There is an organization that is called the International Federation of Technical Analysis, IFTA.org, by the way. And they qualify technical analysts. So I went on to become a master technical analyst, but the funny part is that I had to become a master technical analyst to figure out that most of the stuff out there, and there's lots of stuff out there, right? Most of it is noise, is garbage. It's not only unuseful, it's actually misleading. It could be very deceptive, and I had to figure out that stuff the hard way, so to speak. Which is why whenever you see my chart, it's actually naked, right? You don't see any indicators. You don't see almost nothing. Just the very particular system that I use, which is just a simple, support and resistance levels, key levels, very reliable, which is the symmetric setup. But aside from that, it's pretty naked, right? Today, like I said, a special session because I'm going to talk about the only indicator that is permanently on my chart. The only one. And it's very simple, and I have to say, it is mostly overlooked. It's mostly overlooked by the trading community, by traders. So I think it's an important that I'm going to touch base on that indicator, and I'm referring to the 200 daily moving average. All right. Let's go ahead, let's dive in, and I'm going to show you a few interesting stuff. Alright, guys, so you're looking at, I'm going to show you 5 case studies. Alright, 4 which are, in the past. Obviously, I'm going to show you past events, but 1 which is very recent, which is present, which is relevant, right? This is how I like it. I'm going to save it to the end. We're going to save the best for last. But like I said, what I want to talk about is one particular indicator, right? The 200 daily moving average, simple, because there are a few types, a few versions. But, it's very simple. I'm going to show you how to bring it in. You go to trend like this. I was obviously clicking the indicator button. And over here you can easily find it, moving average right there. Now, mine is already here. It's always here, actually. It is a permanent element, right? I always have it. But you have to remember, it's a supportive element, a second degree, even third degree supportive element. It's not your primary indicator. It's not your primary tool, right? It's not a standalone tool. In fact, I don't think there is any standalone indicator. I actually think this is the best indicator. I mean, it sounds crazy, right? So simple. You got so many names, crazy names, for so many indicators and versions and whatnot, right? I just keep it extremely simple. This one is the only one. It's not even exponential. It's just a simple. Take a look. Let's have a look at the properties, right? So the first thing I make sure is visualization here. I make sure to tick the daily box. I don't want to see it anywhere else, because think about it. If I'm going to switch here to the 4-hour chart, what I'm going to see is not 200 daily moving average. I'm going to see 200 4 hours moving average, right? So no, we want to keep it daily, which is why I'm ticking the daily box. That's the first thing I want to do. Second thing, I'm going to parameters, basically. It's very simple. I keep it, this is the default situation, right? I mean, I change the period to 200 and I keep it simple, close, just don't touch anything. just as it is. And I usually use the red color, but obviously that's something you can decide for yourself. Now, like I said, it's not a primary setup. It's not a primary tool that I'm going to use, right? So think about that. Usually I'm already having a basic assumption with regard to that particular asset I'm looking at. I'm already having a conviction, right? Which is based on my primary tool. In this case, this is the C matrix right here. But I always use it. Well, I'm going to show you a few ways to use the 200-day moving average. And to be honest, I have no idea why is it the 200-day that has such an impact on the markets. And I'm saying markets because it's pretty much, it's true everywhere, right? We just happen to, I'm just going to be showing you the currency market, but believe me, it's applicable in every market. Now, I don't know why, right? But it just happens to be, price happens to react to 200-day moving average constantly and pretty visibly, very clearly, very, sometimes very surprisingly, I have to say. Now, in this case, you're looking at the Canadian Swiss, I was actually in a bearish position. I took a bearish position because that was according to my system, to my setup, to my main primary setup. Like I said, the 200-day moving average is just a supportive element, but it's a very important one, and it can help you a lot. So what I did was what I always like to do. Whenever I see price breaking the previous high and beginning to turn around and breaking the mid-high key level, I'm going to show you the setup, the whole setup right here. These are my 4 levels, right? Whenever it breaks the first level, the mid-high key level, after taking the previous high, that's pretty much where I began to take action. And I always aim for the other side, meaning the lower section, starting with the mid-low key level. So I had a very nice position here. I'm saying nice not in terms of pip. Usually I aim for much more than that, but it was very quick. In 2 or 3 days, price went straight from the upper section to the 74.62. I had a profit order here, so I was out. But I knew that, the bigger picture, actually I have a bigger picture here, right? I always have 2 pictures, one from the daily, one from the weekly, and it always involves 2 setups. One from the weekly, which is the bigger picture. Now the bigger picture points out for further downside move, right? The underlying major trend, if you will. And I was well aware of that, but I was also aware of this particular key level, right? The mid-low key level. I knew it could be a stiff support, so I was out when when price touched the 74.62. I was out, and I just went to look for opportunities somewhere else, and then I saw this beautiful reaction. Take a look at that. This is exactly the stuff I'm looking for. Now, it's not going to happen all the time. Far from it. But when it does happen, it's powerful stuff. And you can see how price was on the upside, which was expected after meeting this strong, key level. It went for an upside correction. It was just correcting the previous downside segment, right? Which is naturally, right? I mean, you would expect that. But when it touched base on the 200-day moving, and you can see 2 attempts, right? 2 consecutive attempts to break through failed, and price began to turn around. That is what I'm talking about. This is where the 200-day moving average has a very important role, right? Because it actually convinced me to go back in, right? So I went back in. And I'm still in this bearish position right now. But this is just one example of how moving average can help you manage your trade. This is money management stuff right now. But it's not just that. Let me show you a few more ways it can help us. So I'm going to take you to the Swiss versus the Japanese yen. Right, the Swiss versus Japanese yen daily chart. And here I was quite impressed, to say the least, with the reaction I saw from price action, because at first I was basically identifying a head and shoulders pattern, right? I was identifying at the very edge of this downside trend. I noticed that it was starting to, well, I didn't notice that at first, but it was forming the left shoulder, and then we had this head, right? This is pretty much where I thought there's going to be an interesting head and shoulders pattern here. But what was also interesting to see was the reaction of the left shoulder. Take a look, right, on the 200-day moving average. And then to see price breaking below the 200-day moving average to create the head. But take a look at the head. Even the head, when it was, trading itself, building itself, it was still acknowledging the 200-day moving average from below. Take a look at these 3 consecutive spikes, right? Eventually, it broke above the 200-day moving average as expected, right? The head was supposed to be constructed completely. But then, this is where the magic kicks in. Take a look what happened with the right shoulder. So, this is really powerful stuff because you not always know. Because what I'm trying to say here, I was able to get much earlier just on the construction of the right shoulder just because of the 200-day moving average. Otherwise, I would have to wait for an official break, right? An official breakout, which came much, much later and much, much higher. But the fact that price spiked here, the 200-day moving average, and began to turn around was enough for me to know, right, that the right shoulder is going to be constructed and there's going to be an upside reversal. Simple as that. Interesting stuff, right? Let's take a look at another example. This is also, by the way, a head and shoulders pattern, right, that I was starting from. This is another inverse head and shoulders pattern. You can see the left shoulder. I really like this pattern, by the way, but I never use it as a standalone pattern. This is also a supportive element because the bigger picture, and I have a bigger picture here, suggests that price should continue to move up and actually much higher than what it is right now. Forget about that head and shoulders pattern, at the bottom. But basically, this is what I was mostly impressed here, because the left shoulder, when the head was starting to form, take a look what happened. It reached the 200-day moving average and basically just jumped over it, right? That's what happened. It gapped over the moving average just to begin to create the head. And then, when it almost finished the head, it was trying to break back in, and it actually failed on the first attempt. The second attempt was successful, right? And the head was forming. But just another way to show you the impact that the 200-day moving average has on the market. That was a quick one. The fourth example I want to show you is the euro versus the New Zealand dollar. So I've shown you one type of utility, right? One type of utility when it comes to money management with the first example. Now I've shown you a way to enter a trade before its time, right? Just by the reaction some patterns have. In this case, the head and shoulders had with the 200-day moving. So it can actually help you get in a better price, in a good price. Now I want to show you how it can help you hold your position, right? So just imagine that you have a bearish position, which I actually did, by the way, on this one. And sometimes I would use the 200-day moving average to pull out of my position. Not always completely. Sometimes just decrease the position from risk management point of view. And sometimes I will actually increase the position because of the reaction of price against the 200-day moving average. And that's exactly what happened here. I was having a bearish position, and at some point it began to, it reached the 200-day moving average, right? And take a look at the first reaction. Price acknowledged the existence of the moving average, right? Because you can see how it spikes it slightly and close back above. Now at this point, I was preparing to cut my position probably in half, like take profit and decrease the position and decrease the position size and decrease the risk, because I was afraid, I was concerned on a counter move, right, an upside correction. So I was waiting to see what I usually do is I wait to see a visible turnaround, right? So I would only need 1 or 2 bars, which would be positive to know that there's going to be an upside correction, and I would decrease the position. Usually that's what I do. But here, the following day, take a look what happened. Just closed below the 200-day moving average. And what happened next was a gap, because think about it. Price was actually closing here, right, below the 200-day moving average. But then it gapped and opened here, right on top of the 200-day moving average line, right on top of the line, and closed below, right? So it actually shows you that it is a pivotal point, right? Pivotal point, the point of no return, once crossed, right? Once price crossing that pivotal point, it doesn't look back. It continues straight. In fact, this 200-day moving average was a support until broken, and now is a resistance. And you can actually see what happened in the following day. Price actually started on the upside, went straight to the 200-day moving average, challenged it yet again from below, but failed to break through and actually completely collapsed, right? Just to show you how impactful that 200-day moving average is. So there's a good reason why I keep it permanently on my chart when there is nothing else, right? Nothing else. All right, this is another interesting example. This is our last one, by the way. The New Zealand versus the US dollar. Now here you can clearly see what's going on, right? Because price, and like I promised you guys, I'm going to give you an example, a live example, right? Something present, something, right, useful that you can actually take advantage of. So, according to my big picture, there's a good chance that by the end of the week, we'll see price. Well, in fact, by the end of the month, even, which is 2 trading days. In fact, that's all that's left to the end of this month, right? But there's a good chance, according to my big picture, that price will go and end the month below 67.70. That's according to the big picture. Now, it could be wrong, obviously, but the fact that price just engaged against the 200-day moving average yesterday, right? Take a look. And you can actually see that it was reacting, right? It actually pulled back. Once it met the 200-day moving average, it pulled back, and you can see the spike here, right? So I think there's a good chance that from this point, I mean, you can already see that price is starting to come off a little bit. I'm not sure if it's going to be sustainable or not. What I like to see is 2 consecutive bars before I take action, right? It's not enough for me to see the reaction against the 200-day moving average. It's not enough. Even though my big picture suggests that this should go downwards. And we have a touchdown, right? A clear touchdown against the 200-day moving average. It's still not enough. I would like to see visible turnaround, which means at least 2 consecutive bars to the other direction. That would convince me that we've reached a very critical point, right? So price was coming from below, but it was correcting a higher downside trend. And this pretty much means that the upside correction is over. And that's hugely valuable because it tells you that from this point, potentially speaking, there could be a new downside move that will surpass the previous major low, right? And that's a big move. I mean, just quick quick look, I'm looking at least 500 pip, 400 or 500 pip. But I will require, and this is an important condition that belongs to the trigger system. I mean, you want to have the bigger picture, right? You want to have supportive elements that can help you, take a decision eventually. But you also want to have a trigger system that help you fine-tune the entry, sometimes the exit as well. In this case, I would require a visible turnaround, at least 2 consecutive bars, in this case, days, before I'll believe that this is it. The move is going to reverse. But I think the evidence speaks for itself, right? Even if it's not gonna, even if the 200-day moving average not gonna break the positive momentum here and completely turn over the move, I think you get the picture. It's a very powerful element. I think the most important indicator, which is why it's the only indicator you'll find on my chart, aside from my system, which is very unique. This is a support and resistance, the key levels, some type of support and resistance key levels. I think it's something which is very crucial. I think I look at it as the primary trading tool, right? A reliable support and resistance system. It could be there are many virtually. Anyway, I hope you enjoyed this session, guys. I also hope you're gonna take a lot from it. I think there is a lot to take from it, and we'll see you in the next session, right? So till next time, be well.